As always, guys, this is just for entertainment purposes only. This is not financial advice.
Hey guys, as you know, I've been investing into food stocks, and especially food stocks who will make the world a better place. And I would like to go over a few things that could affect the price that they are currently having. So what we are seeing that the food price index has gone up immensely in 2022 compared to 2019. We see that food prices have doubled. Doubled, guys, that's a huge increase. And actually look at this line. The question is it going to calm down or not, or is it going to increase further? And what kind of influence will that have on those food companies that we are invested in? Is it going to be positive? Is it going to be negative? So what is going on there in the market? So we see that especially cereal prices, it's gone up 17% just compared to February. Oil price, that's vegetable oil, of course, 23%. And then dairy, meat, and meat, they are doing slightly better. They've also gone up, but actually a lot less. I'm not 100% sure, but might be because just was a bad year for that meat had already gone up quite a lot last year, so that could be the reason. I'm not sure, but and sugar price also up 7%. So yeah, guys, doubling of food price compared to 2019, that's quite high. So let's go over our food tech companies and see how they are reacting to all of this. So our first company, when we are thinking about cereals, what do we think about? We're thinking about Kellogg's. Kellogg's, I love to eat it as a child. And what do we see about Kellogg's? That Kellogg's has been doing reasonably well this year. So it does look like, well, we'll still have to see on the revenues, but it does look like it has been taking advantage of the current increase of cereal prices. At least it has momentum, so it has grown pretty well. It's a pretty old company. It has a stable, slightly growing income, slightly growing revenue. So I think, yeah, Kellogg's is a bit older. It's doing pretty well. But then we're also, what I would like to know is the tech companies. Guys, please subscribe if you like my channel. Don't forget to leave a comment if you're owning any of these companies. Let me know what you think. Second company, BYND Meat, guys. BYND Meat has been devastated. Look at this. It's trading now at half the price of what it used to do. This is making plant-based burgers, and it looks like a lot of people are fearing maybe when meat prices and prices of basically everything are increasing, do people then still want these highly priced plant-based burgers? So I mean, eating those is really nice. It's good for nature. It's probably long-term better for the climate and cheaper for the government. But right now people are looking at the rising energy prices, and then secondly, high inflation. So yeah, and this company, BYND Meat, and this is mainly the reason of their current evaluation. The net income is negative, and there is right now no path to profitability. They are faced with, should I cut the prices of my plant-based burgers, or should I increase them and go to profitability? The problem is, guys, the debt of this company is increasing. So we're going to look at 900 million debt, and with rising interest rates, how is BYND Meat going to finance that? I think in the current climate, this question can be asked. I mean, for sure, the current climate will lead to bankruptcies of some companies. I don't think BYND Meat will be one of them because it's just too big at this point. And then second point is it's going to also get competition from the cultivated meat that is going to hit the market at some point in the next years. So even beyond when it's starting to make profitability, it's not going to be too late. It's going to be able to keep market share. So these are all questions that people are currently asking, and we're seeing the effect on the stock price. Oatly, a little bit in the same boat. although a little bit more stable when we're looking at the longer term vision. We do see there's at least some path to profitability. So I think long term the company itself will be fine, but the stock price might not be, because here even it would trade at 10 times or 9 times above earnings at current price, which is yeah, not that pricey, but it's also not that cheap. And here we see the net debt has pretty much been increasing. So only in 2025 it's going to drop. So the company will be fine. I don't know about the stock price. I think it's still a long way to 2025. And the question is, are stockholders going to be patient enough for that? Next up is Appharvest. It's really like this company, in my opinion, it's food tech. So it's using robots to harvest in its farms, and by that it can generate a lot more tomatoes on the same surface using a lot less water. And actually you can see that investors are rewarding Appharvest for this, and we see that the stock price has been going up this year. I think the fact that we keep getting good news of the extra farms they're going to build. They already have 1 tomato farm, they're building 3 extra farms this year, and I think that's all having a positive momentum on the stock price. There is also a road to profitability. I think this company is going to do just fine, definitely not going to go bankrupt. And also the stock price, I'm expecting that we're going to see some positive momentum continuing this year, even though we have inflation, just because they can become profitable even in 1 year if they really want to. Meatech, different story. They are currently building their first factory that will hopefully start to generate revenue soon. That factory is going to produce cultured fat. Much longer term, they're looking at 3D printed cultivated meat, but they still have a lot of work that they need to do. So that's not going to be easy. They don't have debt. They can loan against that factory they are building, of course, but they are going to be out of money by the end of the year. So they'll either have to loan, which is not very fun at current interest rate, or they're going to have to find more investors. It looks like dilution at the current share price. I don't think it's an option because, yeah, look, this company, it would pretty much have to double its shares to be able to run for 3 more years. So I really don't know, and I think this uncertainty, especially, even though it's like an area where you see a lot of people investing, but I think this uncertainty is keeping down the stock price. Lastly, Agronomics, venture capitalist firm investing in the same area that we have Meatech in. So we are seeing a very, very volatile stock. But I think companies like Agronomics, and maybe its portfolio of cultivated meat companies, and Meatech, I think they could have some positive momentum because countries who are not really, we don't have a local food producing source, like we're thinking Middle East, and then that's in Singapore, smaller city state. They really want to become more food independent, and that's why they're investing so heavily in those sectors. We're seeing Qatar, United Arab Emirates, Israel, Singapore, they're all investing heavily. And where do we see less investments? Well, Europe seems to be doubting. France and Italy are holding European Union a little bit back. Even Belgium, we had a piece of meat in 2020, and who could have actually invested into that, made the climate more pleasant. They were holding a little bit back. So, but generally, long term, you will see at the many videos I have about Agronomics. We're seeing that the growth of the companies they invest in is still huge, and we're still seeing a lot of interest on the private market for cultivated meat companies. Recently, Upside Food had a major Series C investment of 400 million euros. So that shows that there is still a lot of runway before we can fly, and I think we're going to fly high. Guys, thank you so much for watching. If you like my videos, like my channel, please like, please subscribe, leave a comment, and see you next time.